All right. So to continue on with chapter one, we're going to now talk about stakeholders. So a stakeholder is different from a shareholder. A lot of students get that confused. So a stakeholder is someone that has an interest in the business, right? So it could be within the organizations or outside the organization. So essentially, a shareholder is a stakeholder, but there's other stakeholders. As you can see, we have general employees, marketing managers, customers, suppliers. So there's anyone that has an interest or is impacted by the business or the business operations. Whereas the shareholder is a person that owns shares of a company. So let's dive into internal stakeholders. Internal is within the organization. We have the general employee. They earn high wages and keep their jobs. So they have a vested interest in the business, so they keep working. Marketing manager, impact of advertising, marketing campaigns. They obviously have a stake because the company needs enough money for advertising. Company lawyer, they ensure that the company or the organization is following the laws and the regulations. So it's very important. The tax manager, essentially, the whole point of a tax manager is to help save the company's money and taxes, right? So ensure taxes are minimized and tax laws are followed. Owners, which are owners under the sole proprietorship. The sole proprietorship is a business owned by one individual, and sole proprietors pay personal taxes, and they have 100% say with what goes on within the business, right? So their goal is to maximize profit, grow / expand their business. And now we have external stakeholders who are outside the organization. So we already talked about the first one, shareholders of a corporation. So they decide to invest or not invest, earn income from their investment. So you earn income through your investment. For example, let's just say you invest into the shares of Apple. So now you're an owner of Apple. So let's say you buy that share for $10 and you're predicting based off of the market and the financials that their shares that share is going to be worth $15 in a year from now. So essentially, you're profiting $5. Or you could earn income through dividends. If Apple pays out dividends, that's income in your pocket. The governments are an external stakeholder because they ensure businesses pay taxes, like the CRA. So, like, obviously, no one wants to pay taxes, but it's very important. So, you employ more people, follow laws. Customers buy quality products at low prices, get the best warranties on products or services. Suppliers are a very big external stakeholder as well. They sell products and services to the business, get paid on time and in full. That's very important, right? So they have a stake in the business because they want to get paid, right? And obviously, creditors, banks, this is your liabilities. Decide whether to lend money and how much, and ensure business repays loan plus interest on time. Now we're going to actually do a practice question. So we're going to do PQ, 1, 2. So essentially, in order to meet their objectives, so we kind of already talked about their objectives over here, internal and external. So in order to meet their objectives, stakeholders have questions they need answered. Match the following stakeholder with the questions they will most likely ask about a business, given their objectives. So we could think about this from a logical standpoint, right? That's the best way to approach it. Note that stakeholder might have multiple questions, but focus on which question will be critical to each stakeholder. So the questions are here below, right? Are there enough raw materials to manufacture the new product? What is total taxable income? Does the business have enough cash to pay dividends? We talked about dividends already. Dividends, once again, is a payment that the corporation makes out to its shareholders out of profits. Very important. So we can't take out a loan to pay dividends. It has to be out of profits or retained earnings. And retained earnings is the net income we retain in the business that we do not pay out as dividends. We'll talk about these more later on. What is the advertising budget for the current year? What is the business's current level of debt? Has the company followed GAAP when preparing the financial information? What products need to be ordered? So the marketing manager would be, so I'll do it over here. Number one, the marketing manager. Main objective would be what is the advertising budget for the current year? That kind of goes without saying, right? That's their whole job, right? For number two, the auditor in a large accounting firm. That one is going to be, has the company followed GAAP when preparing their financial statements? So the entire purpose of an auditor is to come in. So an auditor is an independent company that comes in and validates the company's financial statements. So GAAP stands for Generally Accepted Accounting Principles. So we'll talk about these more later on, but the lawyers have the law, accountants have GAAP. They have to follow GAAP. GAPs are principles that accountants have to follow in order whenever they're doing transactions, right? Number three is production manager in a manufacturing firm. That one is going to be, are there enough raw materials to manufacture the new product? So number three is going to be A. That goes without saying. Shareholders, obviously shareholders want to make income. That being said, does the business have enough cash to pay dividends? Remember, there's two ways a shareholder could earn money: capital gains, you buy for $10, sell for $15, or the payment of dividends. The next one is Canada Revenue Agency, short form, that's a CRA. So CRA is going to focus on what is the taxable income. Because based off your taxable income, you're going to pay taxes. Then the creditor and banker, this is going to be what is the current level of debt. So essentially, the more debt you have, the less chance of you getting a loan, just because once you get a loan, you're obligated to pay interest, right? So the risk for creditor increases when you have debt outstanding because you already owe interest on other debt, if that makes sense. We'll talk about this more later on as well. Right now, we're just doing a quick introduction. Then number 7 is store manager. This is going to be what products need to be ordered, right? That's